Nice to meet you. This is Dr. Kim from Richgo.
Hello, I'm Kim Ki-won from Richgo.
Today's filming date is January 16th. Today, we're going to have a conversation about some hot off the press news. The Bank of Korea's Monetary Policy Committee has decided to keep the benchmark interest rate unchanged at 3.0% as of today. Last year, they already cut the interest rate twice, right? That's right. This time, it seems that the decision was made due to the current high exchange rate and various internal and external uncertainties. We're going to discuss holding interest rates steady and effects. Amid crisis, consumption and investment suffered. Economic struggles led to rate cut calls.
In December, with the state of emergency and the impeachment situation, consumption and investment really took a hit, right? As the economy was struggling, there were voices calling for a rate cut. However, despite these voices, this time the interest rate has been halted. It has been kept unchanged. So, the biggest reason for keeping the rate unchanged is definitely the exchange rate. So, the situation with the exchange rate played a significant role. So, why is the exchange rate so important? Well, if Korea cuts the interest rate, so what would the difference in the benchmark interest rates between Korea and the US be? The gap would widen. It would get bigger. So, will money move towards higher interest rates? Will money move towards the lower rates? Money will move towards the higher interest rates. So, there's a higher chance that demand will shift more towards the US dollar than the Korean won. So, as the interest rate gap widens, the exchange rate rises even more. And when the exchange rate goes up, Korea mostly exports and imports, right? What happens to the prices of imports? When the exchange rate goes up, prices go up. So that means prices could become very unstable again.
In the end, if the exchange rate continues to rise and the gap widens, it becomes difficult to control the inflation that we were trying so hard to manage. So, can we interpret it this way?
Yes, that's right. Additionally, the blue line represents the US benchmark interest rate. Next, the orange line represents Korea's benchmark interest rate. So do you remember originally, what did they say in the US in September 2024? So they said they would lower the interest rates 4 times in 2025. That's what they said. But suddenly, what did they say in December 2024? I think they can only lower the interest rates twice. So they changed it like this. So the US is lowering the benchmark interest rate less. But what if Korea does more? So what happens then? The difference in benchmark interest rates could really get bigger. That is why I think the US's move to adjust the pace of interest rate cuts this time is also very important. It seems that this has played a role in the current situation, where they've paused the interest rate cuts.
It might be just a basic question, but could you explain why interest rates themselves are actually important?
The benchmark interest rate is literally the rate that serves as a standard. Of course, the benchmark interest rate and market interest rates can differ, but generally, market interest rates tend to follow the benchmark interest rate. But if we think about interest rates, I like to use a metaphor. It's like the water level in a swimming pool. If the water level is high, then is it uncomfortable for me to move around in this swimming pool? It's tough, right? It's tough, right? Because when interest rates go up, most businesses and individuals have loans, whether it's secured loans, unsecured loans, or other types of loans. But what does it mean when interest rates are high? Right now, the water in the swimming pool of the financial market is quite high. So it's really uncomfortable to move around. When you try to move, there's a lot of friction, which makes it costly. But what happens when interest rates go down? It's easy to move. Right. So, you can think of it this way. Lowering interest rates is something we have to do because the economy is in such bad shape that we have no choice but to lower them. That's why the benchmark interest rate goes up and down.
If we look at our current economic situation, it makes sense. It's really fascinating, isn't it? However, it's common sense that lowering interest rates is the right thing to do. So, is it because the exchange rate is too high that we can't do anything?
That's right. So, when we make decisions about interest rates, we can't just look at one thing, right? Right. If we look at the domestic economy, it's reported in the news, and just looking at the economy alone, it would definitely make sense to lower interest rates. That's right. But the exchange rate is really high right now. But if we raise interest rates this time, the already high exchange rate will go even higher. And because of that perfect storm, that's why we decided to pause this time. So even here, the Bank of Korea's Governor Lee Chang-yong said right after the benchmark interest rate was held steady on the 16th that, just looking at the economic situation, it would be natural to lower interest rates. Of course. But what? else do we need to consider? There are so many variables that influence the situation, so we need to consider those effects together. Also, indicators like consumption and construction are dropping significantly more than expected. So, just looking at this, it seems right to lower interest rates. However, what is the first reason for keeping the benchmark interest rate steady? It's precisely the rise in the $1 exchange rate. And what else did they say? Not only the economic fundamentals, but also the current political situation in Korea is having a significant impact on the exchange rate. And right now, the level of the exchange rate is much higher than what can be explained by our economic fundamentals or the interest rate gap with the US. So, it's analyzed that the exchange rate has risen about 31 due to political reasons like the state of emergency compared to the fundamentals. So, the exchange rate is currently around 14.55 So, if we say 31, that means around 14.25 Therefore, Governor Lee Chang-yong believes that the appropriate level for the exchange rate is about 14.25 So, it's about 31 more expensive. It's currently trading in the mid 14.51 range. And the reason for this is being seen as a political one.
They decided to hold the interest rate steady now, but I think there must have been opposing opinions. I'm really curious about what kind of significant impact it will potentially have in the future, right?
So, in conclusion, Governor Lee Chang-yong said that last October and November, they already lowered the interest rate twice. So, when the interest rate is raised or lowered, the results don't come out immediately. It takes time. Time is an economic. It takes time for the effects of a rate cut or a rate hike to properly show. So, they're also keeping an eye on the effects of the interest rates. They believe that it's more prudent and desirable to assess the possibility of additional rate cuts based on the situation while also keeping a close watch on developments.
So, they haven't done it, but they've left the door open for the possibility of a rate cut in the future.
Yes, that's right. And there are actually some committee members who have expressed a minority opinion that we should lower the rates.
That might have been the case.
So, as you can see here, it's true that there are concerns about the exchange rate and other external factors, but the direction of interest rate cuts is already being reflected in the foreign exchange market. Right. They also mentioned that while the rise in the exchange rate could put upward pressure on prices, they believe that due to the economic slowdown, the demand-side price pressures will decrease. Therefore, they concluded that it would be more appropriate to focus on the economy and lower interest rates. This person is saying that we need to lower the rates. So, what did the others say? Others completely agree with this opinion. That's right. That's not a wrong statement. But still, the uncertainty of external factors is too great, so for now, they concluded that we should focus on domestic factors and take a little break.
What think, Rep?
I think keeping the rate unchanged this time is the right move. It seems more appropriate to keep it unchanged this time. If the US had said in December they'd keep raising our interest rates, they might lower rates now. If they had said they would keep raising it for 4 consecutive times, then they would have maintained the existing stance. So they might have lowered it this time. The US plans to raise rates twice. Korea has acted similarly. But Korea has played its card this time. So, how many cards does Korea have left?
Right. 1 card.
One by one. Or even if the US raises it twice, Korea can only do it maybe 3 times at most. So, we have a few cards left and it's already mid-January, right? We still have quite a few left. So, wouldn't it have been better to save this card? Right.
A colleague also shared the opinion that 1 more was correct.
But what is it? They've kept the possibility of lowering the benchmark interest rate wide open. So, what did everyone say? All 6 members of the Monetary Policy Committee, excluding me and Governor Lee Chang-ryul, have already stated that we need to keep the possibility of lowering the benchmark interest rate to below the current annual rate of 3% within the next 3 months.
So, within 3 months for now? Also, because there's a possibility of lowering the interest rates, they've decided to keep it frozen for now and just wait and see.
That's right. So, it's like we're just going to wait and see for now.
We should take a look at the exchange rate market.
Oh, really? I think so. Let's take a look. So, this is a 1-hour chart of the exchange rate fluctuations. If you look here, this is 9 o'clock and this is 10 o'clock.
As we're filming today for January the 16th, right?
Yes. Let me show you this on an actual chart. So, if you look here, this is around 9 o'clock and this is now 10 o'clock. Let me zoom in a bit more. Now at this point, what was the low? It was right at the start of 10 o'clock. It was 1,449 won, so it temporarily dropped below 1,451. And the reason for adjusting the interest rate was to stabilize the exchange rate. Yes, but it has gone back up again. It's currently at 1,455.81. So, while we thought that keeping the interest rate frozen would help stabilize the exchange rate a bit more, in reality, the market has actually gone up a little. In fact, after keeping the benchmark interest rate frozen, the exchange rate has gone up a bit. It's like this, right now.
From the perspective of today's filming, it's 1451. But as you always say, the dollar seems to have more strength to rise, literally. If that happens, it will continue to rise along with it. From our perspective, I think it might be a bit cautious for our country to keep lowering interest rates, right?
That's right. Looking at the various conditions right now, I think the exchange rate is already like a horse that's off to the races. It's already started. I believe that a major upward trend has already begun, and I think the current situation is very similar to 2025. I think 2025 is very similar to 2008. In 2008, and also in 2007, the US lowered interest rates. And they did the same in 2024. There are so many similar factors beyond that. So, what do you think about this time? The exchange rate. This is from January 2008. Let me show you this up close. This is from January 2008. At that time, it kept going up for 1 month, 2 months, 3 months, right? And what happened around March? It went up like crazy, right? Right now, it's been 1 month, 2 months, 3 months, and we're taking a short break in January. And now, in September 2022, it already broke through this peak. I see this as a very significant chart. And at this time, the high point, around 1441. So if it doesn't break this peak and continues to hold support, I see a high possibility of that happening. So the exchange rate has a pretty high chance of skyrocketing, especially in the second half of this year. Of course, I could be wrong. But consider the exchange rate, a cushion. It might be good to have a little bit as part of your portfolio. I bought some today. I added some dollars. I think it would be good to have a little as part of your portfolio. And I bought a bit today. I added more dollars. I bought some when it had dropped a bit earlier. I bought a little more dollars.
I bought it when it had dropped a bit before.
Yes, that's right. Just buy a little bit whenever you get the chance and hold it as a certain percentage of your portfolio. It's not about the mindset of making money with this. The current situation is very precarious, especially for the Korean economy. So it would be good to hold on to some dollars as a necessity. And instead of buying all at once, it would be better to buy in installments. So, if you spread out the timing appropriately, for those who might not have bought any yet, I mentioned that you should start buying dollars from this time. From this time?
That's right.
From around the 1-201 range from this time. So I think it would be good to just keep holding a little bit in your portfolio.
Just so you know, while filming this video, I'm also gradually accumulating dollars little by little. I believe that someday it will become a source of hope for me. From an investor's perspective, could you explain how to respond to the recent decision to keep the benchmark interest rate unchanged and what it means?
The fact that they decided to keep the benchmark interest rate unchanged means that there are a lot of concerns about the rising exchange rate. It was originally on an upward trend, but due to the state of emergency and the nuclear crisis, in December, it overshot even more in the short term. So, because of this, if import prices are stimulated and prices go up again, it becomes difficult to lower interest rates because they need to control inflation. So the government is really worried about the exchange rate concerns. And that's why they're even pulling in funds like the national pension to defend the exchange rate. But the question is, how long can they actually keep this up? That really is a concern.
Yes, I understand. I think the decision to keep the benchmark interest rate unchanged was made with consideration for the domestic market and price stability, which are the most sensitive areas for the common economy. As you mentioned, the opinions of those watching the video might differ a bit. So there might be differing opinions on whether it was right to keep the benchmark interest rate unchanged or not. If everyone shares their opinions in the comments, I think it will lead to a good discussion. If you enjoyed today's video, you know what to do, right? I would appreciate it if you could like, subscribe, and turn on notifications as well.